All right, lately we've seen this really major rebound in the price of natural gas. It's up roughly 27% from its lows in under 3 weeks. It's now basically back to where it was in early January, before everyone freaked out over the president's now mostly rolled back tariff agenda. And I got to say, this is pretty much what I was expecting when Trump won the election. Unlike oil, where the drill translates into more production and thus lower prices, natural gas is uniquely captive to the federal government. The rest of the world's desperate to get its hands on our natural gas, but we can't export it without liquefied natural gas terminals. And those can only get built with permission from the regulators. The Biden administration was pretty hostile to fossil fuels, but Trump's happy to greenlight new pipelines and new LNG export terminals. So now that we're no longer terrified that high tariffs will throw the economy into recession, how do we play this relentless rebound in natural gas? Well, first, probably the most obvious, frankly, if you watch the show, I like EQT. That's the Pittsburgh, Pennsylvania-based operation that's the only large-scale integrated natural gas producer in the United States. So far, this stock's up an astounding almost 22% for the year. It's trouncing the rest of the group. About 3 weeks ago, on the exact day that natural gas prices set their low for the year, we spoke to the company's CEO, Toby Rice, and he explained that EQT's secret sauce is their ability to generate consistent cash flow growth, even when the commodity's going in the wrong direction, thanks to their low-cost structure. Since then, this stock's up a quick 15% as natural gas started moving in the right direction. I'd also love some natural gas pipeline exposure here, in part because most of these pipeline stocks feature generous dividends. How about ONEOK? Yeah, that's 0-1-O-N-E-O-K. It looks like one and OK. All right. It's one of my favorites. This is a major player in nat gas gathering, processing, storage, and transportation with a big nat gas liquid system. Now, ONEOK's still down almost 14% for the year, primarily because it got obliterated in the wake of the Liberation Day tariff announcement, with only a modest recovery since then. The most recent quarter was also less than ideal, a revenue beat paired with an earnings miss and light cash flow numbers. Still, ONEOK offers a unique value proposition if you believe in a major natural gas comeback. Plus, even with the softer first quarter results, management reaffirmed its full-year forecast. That's a real sign of confidence to me. Down here, the stock sells for less than 16 times this year's earnings estimates. It's got a 4.8% yield backed by tons of cash flow. ONEOK, it's a buy. What else? You know I'm a big fan of Enbridge, the Canadian pipeline colossus, although their network also has lots of crude oil exposure. Still, I think Enbridge belongs on any short list of natural gas plays because they operate the continent's largest natural gas utility by volume. These guys were always big in Canada. They run the main gas utility in Toronto. But last year, they bought 3 American utilities in Utah, Ohio, and North Carolina, respectively, from Dominion Energy, and that's created North America's largest natural gas utility. Now, despite a solid 5% gain so far this year and a nearly 18% gain over the past 12 months, the stock's still cheap. Trading just over 20 times this year's earnings estimates. Get this, it sports a juicy 6% yield. What is not to like about Enbridge? Finally, we want some exposure to the companies leading the way in the liquefied natural gas export space, but many of the LNG exporters have proven to be very tricky stocks. One of the biggest up-and-comers, for instance, in the space, Venture Global, came public in January. It's become a comedy of errors. Even after stabilizing and recovering a bit over the past month or so, the stock sits at $10 and change. That's down nearly 60% from its 25% IPO price. Sempra, diversified energy company that we used to like very much for its LNG business, has also become a bit of a disappointment. The LNG business is fine, but the regulated gas utilities in California is struggling. So let's keep it simple, and let's stick with the LNG OG, and that's Cheniere Energy, which became the first legitimate LNG exporter nearly a decade ago. We've been with it the whole way, and remains the largest exporter of liquefied natural gas in America. The stock's up more than 8% year to date after fully recouping all of its post-Liberation Day losses. Cheniere has many growth projects, and I think it can keep building on its lead in this space, which is why I like the stock. So here's the bottom line in this exciting sector. With the natural gas trade coming alive again, I like EQT for production, ONEOK and Enbridge for pipelines and distribution, and the OG Cheniere Energy as a pure play on liquefied natural gas exports. I think they very much work here with a fossil-friendly White House, and now I just have to grok what OG means, and I'm in fantastic shape. Let's go to Cliff in Missouri. Cliff.
How you doing, Jim?
I'm telling you, Cliff, this is a great day. Thank you. Great day. What's going on?
Great. I just want to check on Boeing.
I continue to pound the table on Boeing. Ever since Kelly Ortberg got in and they raised the capital, it's going to be up again tomorrow. I just listened to Phil LeBeau talk about the monthly deliveries. They're fantastic. You must stay long Boeing. That's it? Okay. Anyway, now that the natural gas trade is back in fashion, I like names like EQT, ONE, Enbridge, and Cheniere, and they should all work in this environment as natural gas ain't going down. Now, watch more Mad Money, including my post-earnings exclusive with footwear player On Holding. Then, how is Trump shaping the tech giants? I'm telling you where I stand after the president's overseas appearances today. And Euler calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.